When companies that have high profit margins over a long period of time trade at depressed prices, when you can get a company with sustainable economic moats and a margin of safety, that's what makes for great investor returns. Folks, we're talking about Disney today. The company is set to report their earnings before the market open on Wednesday. 1/3 of the company is barely breaking even right now, and shares are trading near a 10-year low. But Disney's a turnaround story, and all this is about to change, and it's got me super excited to talk about. I absolutely love shares at these levels. If you have the stomach to buy when the market is selling off, beginning a position before the print may be a good idea. Here's why I'm so excited. I know there's a lot of negativity around the company being too woke, but the perception doesn't match the reality on the ground. Attendance at parks, even here in the US, has been growing despite all the criticism. Higher attendance and of course higher pricing has led to super solid revenue and profit growth at parks. Now to the turnaround. We're talking Disney Plus and movies. Revenues were growing, but costs were way out of control. Enter Bob Iger again. Streaming turned a profit for the very first time last quarter. A meager $18 million, but signs of better things to come. The company needs to improve on this in the June quarter. Meanwhile, movies have been losing the company money the past year as well. Iger's strategy has been to focus more on quality, not quantity. Inside Out 2 and the new Deadpool movie are great examples of the new strategy paying off. Now, only a portion of Inside Out 2's revenue will fall in the June quarter, but the box office results are a huge departure from the year-ago comps, and movies should swing to a profit, if not this June quarter, by September. When the earnings release comes out, I'll be looking for 4 things. Continued growth in domestic parks attendance and revenues, acceleration in streaming revenue growth, at least to keep pace with the quarter-over-quarter acceleration Netflix experienced, improved profitability in streaming, and movies swing from a loss to a profit. If all these things happen, I think the outlook for shares is super exciting. If the quarter is a mixed bag, shares may take longer to bounce back, but we're getting improved visibility to the turnaround at Disney, and that's got me super excited.